Good morning, ladies and gentlemen. At this time, we would like to welcome everyone to Marfrig Global Foods SA conference call to present and discuss its results for the first quarter 2019. The audio for this conference is being broadcast simultaneously through the internet in the website www.marfrig.com.br/ir. In that address, you can also find the slideshow presentation available for download. We inform that all participants will only be able to listen to the conference call during the company's presentation. After the company's remarks are over, there will be a Q&A period. At that time, further instructions will be given. Should any participant need assistance during this conference, please press *0 for an operator. Before proceeding, let me mention that forward-looking statements are being made under the safe harbor of the Securities Litigation Reform Act of 1996. Forward-looking statements are based on the beliefs and assumptions of Marfrig's management and on information currently available to the company. Forward-looking statements are not guarantees of performance. They involve risks, uncertainties, and assumptions because they relate to future events and therefore depend on circumstances that may or may not occur in the future. Investors should understand that general economic conditions, industry conditions, and other operating factors could also affect the future results of Marfrig and could cause results to differ materially from those expressed in such forward-looking statements. And now a message from Mr. Marcos Molina, founder and Marfrig Global Foods chairman. Please, Mr. Molina, you may begin the conference.
Boa tarde a todos. Gostaria de agradecer a participação de todos vocês em mais uma conferência de resultados.
Good afternoon, everyone. I'd like to thank you all for your interest in participating in Marfrig's Q1 2019 earnings release call.
Antes de começar a apresentação e comentários, eu gostaria de deixar meus sentimentos ao nosso senhor Eduardo Miron, que não está conosco hoje devido ao falecimento de seu pai. Minhas considerações a ele e toda a sua família.
Before we start the presentation, I'd like to send my condolences to our CEO, Eduardo Miron, who is not here today because his father has passed away last night. My sincere respect to Eduardo and his family in this moment.
Agora, gostaria de começar destacando a performance da Marfrig no primeiro trimestre de 2019.
Now, first of all, I would like to highlight the Q1 2019 Marfrig's performance.
Que foi melhor em praticamente tudo comparado ao primeiro de 2018.
Which one was much better compared to Q1 18 on a pro forma basis.
Destaco também as conclusões das aquisições da operação da Quick Food na Argentina e da unidade de Várzea Grande no Brasil.
Also, I would like to highlight the conclusion of Quick Food in Argentina and Várzea Grande transactions in Brazil.
Importante passo em nossa estratégia de atuação em produtos de valor agregado e fortalecem nossa posição em líder mundial da produção de hambúrguer.
Which represents a relevant step towards one of the pillars of our strategy to focus on value-added and industrialized beef products and strengthen our position as a global leader on beef patty production.
E o relacionamento com importantes clientes, principalmente no food service.
And also serving the major food service customers, demonstrating our relationship with this specific channel.
Ainda sobre a Quick Food, desde que assumimos, já revertemos as margens negativas e já estamos entregando resultados positivos.
Still talking about Quick Food, since we acquired the company, we reverted negative profitability to strength results in the first quarter 2019.
Esses ativos, somados à nossa operação na América do Sul, nos coloca numa excelente posição para capturar os ganhos do novo cenário global.
These assets, added to our current capacity in South America, put ourselves on an excellent position to capture the gains and the profitability of the new scenario for global proteins due to the events in China.
Afetado pelos eventos que estão ocorrendo na China, que realmente são impactantes no comércio global de proteínas e altamente positivo para a Marfrig.
Reinforcing that the events in China, they are changing the global protein sector on a global basis, and they will create significant opportunities for the company in the near future.
Por fim, comenta o sólido e robusto resultado da Operação América do Norte.
Last but not least, I will comment about the robust results for North America operations.
Que demonstra mais uma vez nosso acerto na estratégia global, que conforme o guidance nosso de 2019,
which demonstrate our assertive strategy to acquire the North American asset and maintain the global presence of the company.
Em ser uma empresa global,
being a global company,
sustentável,
sustainable,
rentável com geração de caixa.
Profitable and looking for cash flow generation.
Muito obrigado a todos. Passo a palavra ao vice-presidente financeiro de RI, Marcos Espada.
Thank you all, and I will pass the word to Marco Espada, the CFO and Vice President of Finance. Thank you.
Thank you, Marcos. Good afternoon, everyone. I want to start by thanking everyone for participating in another earnings conference call from Marfrig Global Foods. Today, we will comment on the results of the first quarter of 2019. Also present here on the call with me, Mr. Fabio Vasconcelos, our Vice President of Planning and Management. And also, I'd like to introduce and welcome our new Investor Relations Director, Mr. Victor Pini. On slide 3, I want to start with the highlights of the quarter and to comment on some points we consider important. Before starting the financial highlights, I would like to mention that from this quarter on, we will disclose the financial and operating information separately for North America and South America operations. Turning to the financial highlights, in first quarter 2019, we have generated more than 10 billion reais in revenue, an increase of 8% over first quarter 2018, already adjusted on a pro forma basis, which means that it already includes the results of Quick Food and National Beef for the numbers used for comparison of first quarter 2018. The gross profit was 927 million reais, and we have maintained the margin at the same levels of 2018, at around 9%, even in a more challenging scenario due to the most adverse weather conditions in both the United States and South America. We have increased our EBITDA by 16% compared to first quarter 2018, reaching 571 million reais. The margin was 5.7%, an increase of 0.4 percentage points from compared to the first quarter of 2018. In this quarter, the net income was 4.3 million reais, which shows and confirms that our strategy adopted in 2018 were correct. A positive result in the first quarter, which is seasonally the worst one, leaves us with a very positive feeling for a great year of 2019 ahead of us. In order to further assist the projections and confident in our strategy, given a positive momentum for the bovine cycle boosted by the new world protein scenario and the results of our operations, the company, as disclosed in a material fact last night, decided to provide a guidance for the year of 2019. Commenting on the recent strategic moves, late last year, we have announced the acquisition of Quick Food in Argentina and also the acquisition of the assets in Várzea Grande in the Brazilian state of Mato Grosso, both from BRF. Quick Food was, as we have already commented, has some of the most recognized brands in Argentina, including Pachi, which is the synonymous of high-quality beef patties in Argentina, and also Vieníssima, another well-known brand in sausage, among other products. We hired to serve as the CEO of this operation, Mr. Gustavo Cal, who is an Argentinian and has over 29 years of experience in the industry, including Minerva and Cargill. He knows very well the local market and will play a fundamental role in the success of our strategy. And actually, he has already managed to reverse the results of the operation in just one quarter. In another move to boost our strategy of growing in a higher value products, we are assuming the processed product operations in Várzea Grande, Mato Grosso, under a long-term contract with BRF, in which we will supply beef patties, kibis, and other products that they will sell under the Sadia and Perdigão brands. This operation will be further strengthened by our long-term partnership with McDonald's since the times of Keystone, which we have maintained this relationship at our beef patty plant in Ohio, which today is ran by our national beef in the North America division. This relationship with McDonald's is fundamental to our strategy of working with key clients in the food service channel and strengthening our position as one of the world's leading beef patty producers, with production capacity of over 230,000 tons per year. In corporate governance, to increase transparency, we revised our established various compliance policies, which included the revision of the anti-corruption policy and the establishment of the policies for conflicts of interest, free competition, and relations and communications with government officials, which will reinforce our commitment to compliance and ethical conduct. In the sustainability front, which is a fundamental pillar of our strategy, we have created the Sustainability Committee, which is formed by prominent and highly respected professionals. We have also hired a sustainability officer, Mr. Paulo Pianese, which is responsible for incorporating in our routine activities the actions planned by the committee and for further improving the good practice that the company already has in place. Moving to slide number 5. In this slide, we will explain the highlights of the North America operation with further financial and operational details in this quarter. We had a very severe winter in North America, which affected our carcass yield and consequently reduced our sales volume. However, despite this scenario, cattle prices were stable and demand remained solid, reinforcing the favorable moment of the cycle in the United States. The indicator for this is the cutout ratio, which is the USDA selling price over the carcass price, which was 1.74 or 3% higher than the first quarter of last year, reflecting the 3% increase in average sales price. Consequently, net revenue grew by 1% and gross revenue in dollars advanced 19%. Let's move now to the South America division. At the South America division, we also had adverse weather that affected the supply of cattle. For example, because of the prolonged rainy season, producers kept their cattle in pasture for longer, which pressured cattle prices and cattle availability. Uruguay also experienced adverse weather, and also with the sale of live cattle for export, the primary processing fell 5% on the prior year period, according to INEC. These events had a negative effect on the mix of export destinations and directly impacted the volume of sales and justified the fall of 12% seen in the first chart on the left. Revenue accompanied sales volume, falling by 11%. Gross margin was 9%, reflecting the higher cattle prices in Brazil and Uruguay due to the reason I have just mentioned. An important highlight on this quarter is the turnaround in margins at Quick Food, which were negative by the time we have acquired the asset. After adjustments to the operation to streamline the cost structure, we maximized the utilization and we strategically started to focus on exports. Now, the asset is presenting very positive margins already in the first quarter. Let's move now to slide number 8. On this slide, we comment on the consolidated performance of the company, and I would like to start with our positive result, a net profit of 4.3 million reais. Although the number is not big, we believe that the fact that it's a positive number in the first quarter, which is seasonally the worst one, brings us a very positive message. The strategic moves made in 2018 were in the right direction. It's important to note that despite the lower sales volume due to the seasonal and weather factors, as mentioned earlier, the company was able to keep its gross margin stable and to expand its EBITDA margin. We have posted growth of 8% in net revenue, 7% in gross income, and over 16% in EBITDA, which is explained by the margin improvement in North America division, recovery in profitability in Argentina, and also the depreciation in the Brazilian real against the US dollar. Moving to slide number 9. Here I will comment on cash flow. We had operating cash flow negative of 712 million reais, impacted mainly by two factors. The cash effect of results obtained in 2018, specifically payment of income tax and bonus payments in the North America operation. Also, changes in working capital, mainly due to the increase in inventories. The payment of this bonus in the North America transaction is related to the excellent result generated in the operation in 2018 and was paid in this first quarter of 2019. The variation of stocks of inventory is justified by some factors. The addition of the Quick Food operation in its inventories in our balance sheet, the seasonal effect due to the use of our land slaughtering facility in Chile, and also, and most important, the effective inventory increase, mainly in Brazil, in preparation to face the new global scenario of proteins, preparing us to export more since the end of March onwards. The export-oriented production itself has a larger cycle, which automatically increases the inventories. This inventory build-up movement, in fact, has a negative cash impact in the first quarter, but leaves us in a very good position to take advantage of the new global prices that are presented, especially for China. Not to mention here the potential qualification of new plants for export to this market. We also had the cash consumption in suppliers of 175 million reais, which was due to the reduction in working capital operations, which also reflects the reduction in the other line of our financial expenses. On top of the operating cash flow, there were the interest expenses and capital expenditures, which in this quarter had the impact of Quick Food and Várzea Grande acquisitions, leading to a free cash flow generation of negative 1.4 billion reais. Only for illustrative purpose, if we exclude the non-recurring effects of the payments of bonuses and the acquisitions, the free cash flow would be negative 698 million reais instead of the 1.4 billion. Moving to slide number 10, where we show our debt profile and leverage ratio. Marfrig ended the first quarter with a gross debt of $4.1 billion, up 6% over the prior quarter, mainly due to the securing of new credit facilities to replace working capital operations and cash consumption, which allowed for reducing working capital operations that typically have a higher cost. The leverage ratio in Brazilian real stood at 2.76 times. It's important to note also the improvement in the debt maturity profile, with the larger maturities coming during the long term. In this sense, in early May, we issued a new $1 billion bond maturing 2026 with interest of 7% per year, combined with a tender offer for bonds maturing in 2021 and 2023, which pay interest of 11.25 and 8% per year respectively, which will further lengthen our maturity profile and reduce our cost of debt. The liability management effort is part of the company's commitment to have a low financial leverage and an adequate debt structure. Moving to slide number 11. This slide presents Marfrig's sales profile and exposure to countries. Today, 62% of the revenue comes from the United States and 12% from Brazil, which shows how our base is diversified in our exposure to the best destinations. China, in the first quarter, accounted for 6% of our revenue. And here, I should mention that in the new global scenario for animal protein, due mainly to the African swine fever, sales share to China should increase. Japan accounts for 5% of revenue and also presents potential to be explored given the recent authorization of exports from Uruguay. We are already taking advantage of the sales structure that National Beef has in Japan to sell products from Uruguay. This is all part of our map of opportunities and commercial actions that will leverage our sales to the best destinations by drawing on our global coverage to drive our results. I also should mention the various sales channels and client relations, such as the relationship with McDonald's, which National Beef did not have prior to the beef patty business in Ohio, which now is run by National Beef. In April, we began to produce and sell beef patties to McDonald's in Brazil as well, through our new plant in Várzea Grande. We already sell to McDonald's in Uruguay, and also now in Argentina we are selling as well. Today, we have important clients such as Sam's Club, Topco, and leading supermarket chains. All of this leaves Marfrig well positioned to capture opportunities generated by this new global scenario. Moving to slide 13. On this slide, you can see the main actions and fronts on which we are focused, in line with our strategic pillars, and which will guide Marfrig on delivering the guidance that I will comment shortly. Our strategic direction and expectation for the year is to generate positive cash flow, to reduce our leverage compared to 2018 end, and to continue our liability management actions to reduce our cost of debt and lengthen our maturity profile. Another fundamental action is to conclude the acquisition that we made jointly with the other shareholders of National Beef in the state of Iowa. We will also advance in the synergies between North and South America operations. And we will continue to implement the operational improvements in actions and KPIs in South America. I also highlight our actions in sustainability. Marfrig has always had this very strong bias in our culture, and we will go deeper into this subject with the recent creation of the committee, the hiring of the sustainability director, Mr. Paulo Pianese, the partnership with Embrapa in the beef the issue regarding the low carbon and neutral carbon beef, and many other projects, which demonstrate our commitment to this theme. Before proceeding with the presentation, going to slide number 14, where I will talk about our guidance for 2019. In order to provide more transparency and to further assist the market projections, and as we are confident in our strategy, giving a positive momentum for the North American operation that has already shown an improvement in the first quarter compared to 2018. That was already a very good result. It's important to mention that. And with a more favorable perspective for South America, given the new global protein scenario, we are sharing our more optimistic view for 2019 results. As you can see in the table, we are projecting net revenue of 47 to 49 billion reais in 2019. Also projecting an EBITDA margin of 8.7 to 9.5%, and also a free cash flow before dividends to minority shareholders of above 1 billion reais, between 1 billion and 1.5 billion reais. Our projections are based on an exchange rate of 3.9 reais per dollar, and the results started from the results reported in this first quarter. We reiterate our confidence in the timing of the cycle and believe in our strategy in the adequate footprint to capture the opportunities of this new global protein scenario that is already present and always showing improvement since the end of March. Finally, I'd like to thank everyone for following our presentation and inviting you for the questions and answer section.
Thank you. Ladies and gentlemen, we'll now begin the question and answer session. To pose a question, please press the star key followed by the 1 key on your touch-tone phone. To remove yourself from the questions, you press star 2. Our first question comes from Barbara Halberstadt, Bank of America.
Hi, thank you for taking my question and for the results for this quarter. I actually just have a very quick question. I wanted to understand a little bit better what we can expect for working capital for the upcoming quarters. I understand this one was atypical, so just wondering when we can see a more normalized level and what level would that be? Thank you.
Hi, Barbara. Thank you for your question. Well, regarding the working capital going forward, I think we have achieved a level of working capital usage that is already considering the new export increase scenario, especially in Brazil. So we don't really expect any increase in terms of working capital utilization going forward. You should see a stability in that sense until the end of the year.
Okay, thank you. And just to follow up, regarding, I don't know if you mentioned this in the beginning of the call, but given the escalation of the trade wars between U.S. and China, do you expect any negative impact for your U.S. operations or the portion that is exported?
No. Well, China out of the United States does not represent a significant role in terms of exports for our North American operation. So in that sense, we do not expect any impact of this trade war for our operation there. And just going back to your first question, I reaffirm what I've said in case there's no increase in terms of export volumes. Okay, so in this case, there's new qualifications for new plants in order to they're able to export to China, for example. We might have a small impact in terms of working capital, a little bit more.
Okay, understood. Thank you.
Thank you.
Our next question comes from Richard Santovaki, Bradesco.
Hi, guys. Thanks for the call. Just a couple of quick questions. Can you give us I appreciate the guidance for fiscal year 19, but just an update on what you expect CapEx to be, and also taxes, and if we should consider this level of a bonus payment, something or a level that you'd expect to continue in the future.
Hi, Richard. Thank you for the question. Regarding CapEx, our expectation is to be around 1 billion reais for the year. So this is already including the acquisitions that we had mentioned already in this first quarter. So that's basically the number. Regarding the second question was regarding taxes. Well, the impact of taxes, we don't expect really a huge payment in terms of taxes, as we do have some credits here in Brazil. But the most you can consider is around $30 or $40 million. That's probably the total amount that we should spend in terms of cash for taxes in 2019.
Okay, and just on the bonus payment, is that the $436 million? Is that a level that you'd expect to remain fairly steady in 19, just as we try to model out free cash?
I really hope that the number is going to be repeated or even increased in 2020, actually. So that would mean that we would have a very big and huge result for the North American operation. So for 2019, that's the number that was paid. There's nothing else to be paid in this year. But as I mentioned, we really do expect, and our intention is really to pay even more next year.
Okay, and just one last question. You mentioned liability management efforts in the presentation. So should we expect that would occur through a pay down of short-term bank debt, or do you think you'd call the bonds? And just how should we think about your cash levels going forward with the liability management that's ongoing right now?
Well, our current liability management exercise is still going on. I mean, our tender offer is still open, so we don't have the final result for it yet. I understand that the early settlement has already gone, but it's still open. So after the conclusion of this, we're going to analyze and see what are the debts we're going to be liquidating. Not sure yet if you're going to call the bonds, and I'm not going to state this at this moment, but it is a possibility.
Okay, great. Thank you very much.
Thank you.
As a reminder, as to ask a question, please press star 1. This concludes today's question and answer session. I would like to invite Mr. Marco Antônio Spada to proceed with his closing statements. Please go ahead, sir.
Thank you. First, I would like to thank all of our team here for the efforts in bringing this result of the first quarter. Also, I would just like to reinforce our commitment to our guidance, our confidence in our two operations. We keep bringing some very good results, especially in this new global protein environment. Thank you all for the participation, and we are available through our investor relations team here to assist you going forward. Thanks.
Thank you. That does conclude our Marfrig's conference call. Thank you very much for your participation and have a nice day.